Morning, Jason Sen from daytradeideas.com on 11th of November. It's Monday, start of the week. This is the weekly chart for silver. Obviously you can see we've been in a fairly decent bear trend now for quite a while, over a year. Well, actually if we go all the way back to where it started, it's we saw a top on the 25th of April 2011, so almost 2.5 years really we've been in a bear trend now. More recently, if we look at the daily chart, you can see how we have been moving sideways pretty much through all of October and November, just drifting in a range. But I think we've started to re-establish the downtrend now. It doesn't seem that obvious if you look at this daily chart, but we did top out just below the 61.8% retracement target, 23.35. We failed there. This was quite a negative candle as we spiked higher and then closed near the open. That was followed by a big down day just to confirm that that was the high for the bounce in a bear trend, that was really. And since then we've just been edging lower gradually, but this morning we've opened below the 100-day moving average. It's the first time we've been there since the middle of or closed or opened below there at least since the middle of October. And I think we can take that as a further negative signal that this longer term bear trend has now resumed. We are getting a bit oversold on the daily chart on the stochastics, but I don't think that's something we should pay too much attention to. In the short term, on the 4-hour chart, we've now broken below the short term 61.8% Fibonacci support, which is at 21.47. We did that on Friday and we've opened below there. That coincides nicely with where the 100-day moving average is as well, so that's going to act as good support. That 21.45, 21.50 area is where we're likely to stay below. I mean, in the short term again here, oversold on the stochastics, but fighting the trend is really not worth it. Just because we're oversold, we can stay oversold and get even more oversold. So watch for a break of Friday's low. That was 21.28, and that will again signal yet another bearish factor into the market, and we could be headed towards October lows eventually at 20.51. It's really only a close, well, certainly above the 100-day moving average at 21.45, and really above this sort of fib level of 21.60 that I would have to start rethinking. So we'll see how that progresses during the week. Thanks very much. I'm Jason Sen from daytradeideas.com.